Good morning, everyone. Kalimera, Kali of the Mother. It means Happy New Week. It's Monday today. Hello, everyone. I hope everyone is doing well. Had a good weekend. Had a good fun. Let's say recharge the batteries or get grounded, get earth. Had a good time with friends and family, people that you love. And people that love you as well. So let's bring the music to kill a little bit of silence. Right, here's a lovely music in the background. There it is. Here we go. Very nice. Cool. Let's see who's here. Let's have a look. Who's here? Right. Good morning, Easy. Good morning, sir. And of course, one of our superstars here, Miss Van the Bubbly. Good morning. Good morning, good morning. Right. Okay. So what happened to Bitcoin? Well, we broke out from the range to the downside and it just wanted to go down. And we knew that we had a CME area down here to be filled or mitigated, so to say, right? So look at that. It lost the 115, right? So it lost the 117. It got out of the range, target 115, broke the 115, it went all the way down to 112. On the 12 hours, it did not manage to close below that, okay? And now we have a reaction, okay? We have a bounce from 112, okay? So let's go a little bit lower in time frame. Let's go down to 90 minutes and investigate a little bit, closer. You can see here how it's respecting the G levels, right? It goes all the way down, again respecting the next G levels, 112, and you see these lovely big wicks that is telling you that there's a lot of buying pressure, a lot of orders have been triggered, and the price is moving to the upside. How cool that is that you have the G levels matching with the market, so to say, reaction, okay, what the other traders did, okay. Right, so let's have a look on the CME. So here's the CME, and today officially we can say that that CME has been mitigated, right? So that now officially we can turn this into green. There it is, green. That CME gap now is out of the way, 113.8. Okay, it's out of the way, so it's been mitigated. That is done, out of the way. Okay, we have one tiny CME gap right above between these guys here, right? So I'm going to leave these as red. There it is. And let's see if today later, I can take this out because that numbers now has been cleared. And let me grab this. Because the price is under the CME gap, so we need to close above 117. Okay. Now, even on the daily, you can see that we have a very strong week. However, it's a bit early. Okay, it's a bit early. It's Monday. It's a bit, it's early hours in the morning as well. So let's see what the rest of the day is going to give us. Okay, but for the first CME gap has been filled. Okay, 113.8 is out of the question. It's done, out. Okay, we've got new gap left above, and we've got a few other ones lower. Speaking of which, I can drag them to bring them more closer to us, to our attention. Okay. I can delete that one because the price is way above. The second one, we don't need it. It was that one there, but it's the same price. Okay, it's the same price. So if we close under 103, it's going to take out both of the CME gaps. That CME gap here and that CME gap over there. That one's still ongoing. That one's still ongoing. Right, so these are the three CME gaps lower. Okay, 109, 105, 103. Okay, and now we have one fresh one at 117. This is it, about CME gaps. Okay. Always, I wait for a body close under the CME for me to say that the CME is mitigated and we don't have any unfinished businesses. Other people like the price to go by like a touch and go. They don't care about closing. I found through my observation that it's more accurate to my eyes that this area is out of the way when you have a body close, a daily body close. The rest of the gurus, they can do whatever they like. Right, here we are. So, since 112, this is a CME gap. So we have that green box that was down to the CME gap. So that is out of the way. Okay. Now, I need to have a close monitor the 50% of that new, let's say, let me bring the ruler between these two guys here. Right, 115 and 112, I need to find where is the 50%. Okay, and that will help me to visualize and understand. Okay, let me do this in pink. We all know what pink means. It's 50%. Okay, the red ones are the 50% of the G levels. The pink one is the 50% between the G levels. Okay, let me explain that again. Go out to 12 hours. So every red line, it's 50% based on the G level frequency. Okay, when you have pink lines, it's a 50% between a specific G level. Okay, internal. This is a key level, and this is a fractal, like a first breakdown G level. So that is the 50%. Okay, the same thing here. So just to leave that out of confusion, I can make it dotted like all the other ones, and you can understand this is our 50%, right? Here we go. So go back to 19. So we got Bitcoin bounced from 112. It went all the way up to 50% between 112 and 115, which is around 114. It got rejected, but managed to break through, find support once, twice. So that kind of attitude here, for the time being, as we speak, 10 o'clock in the morning, it looks like it's going to be bullish. Okay, it's looking that you want to go higher, right? I wanted to do a B here, but B stands for bearish and bullish at the same time. So I changed my mind and make it an arrow. So it's looking that it wants to go higher. Okay, so bounce from here, very strong wicks. Okay, abundant wick, it means it wants to turn around. Okay, same here, but it did not manage to break resistance. It continued to the downside. Abundant wick did not manage to break the 50%, comes down, multiple abundant wicks, and this time it broke the 50%. So this time is the only time, okay, that managed to break levels. Okay, that abundant wick, it was strong enough to claim G levels. Okay, this one did not claim this one. That abundant wick did not claim this level. This one, however, it did. Okay, so we're kind of having a reversal. Okay, here's your structure, your last high, that is your last low, and you broke structure, you broke the previous highs, so you broke in structure, so you're having a reversal, potential reversal. Okay, so far so good. Look at these wicks at the bottom. It's telling you that 50%, that 114 is respecting and wants to push the price up. Now we need to see, for the rest of the week, we need to see continuation into the volume. We would like to see more traders to come in and push the market up. Right, go to the larger time frame. This is the long-term setup. Okay, we got rejected 122. We know about this. It comes all the way down. It went all the way down to low is 111.982, so almost 112. Okay, so it went past 112 and then bounced up. Okay, now if I want to see where is the 50% between 122 and 109, let's do a small observation roughly. Okay, so here's my 50%. Okay, and now here's the problem. on a large time frame. We under the 50%. Okay, obviously we have a CME gap. Obviously you have this imbalance. We understand this. For the following days, we like to monitor, right, this guy here, 115 or 116. Okay, we need to monitor 116. We want to see if we're going to continue to the upside, if we still have remaining bull run, so to say. Okay, if we have any remaining push to the upside, we would like to see that we're going to claim the 50% of that range. Okay, now is it going to happen now? It's going to happen in 2 weeks? It's going to happen in 2 months? I don't know. Okay, but we're going with market structure, right? If you want to see continuation to the upside, you need to claim levels. If you start losing levels, it's a moment. Okay, now by going a little bit deviating under the 50%, it's not always like panic mode and we start, thinking bearish. Let me give you another example why. Okay, let's take the 50% between 109 and 95. Okay, so let's draw a line here. All right, look at that. So you can see here that we have a deviation. We got rejected. We lost the 50%, right? Bounced from the G level, pushed to the upside, but we did not manage. We got another rejection, but we did not manage to close above the 50%. So it went all the way down. Now, a bit later, it came around, got rejected once again on 109. This time, it deviated under the 50, but recovered, okay? And continues to the upside. So that is a possible scenario that it deviates and then later in the week it may recover, okay, and claim that G level, that 50%, okay. So we don't want to, let's say, come to conclusion right now. We go level by level, right, step by step. So far it's on its way down. It filled the imbalance, the CME gap as well, and now we see a reaction like a relief rally. And the question is this a rally or is this going to be really true reversal, right, and continuation to the upside? If it was a rally, you're going to see something like this and then continue to the downside, okay? We're going to call this relief rally, okay? Because it went so aggressive to the down, this is a relief rally just for a little while and then continue to the downside. If this is going to be a reversal, then we expect to see something like this. Going up, bounce here, find support, and then continue to the upside, which means that 50% is holding support and doesn't let the price fall down. So that 50% is crucial to us, okay? We know that always 50% is significant level, okay? Now we need to pay attention, like make sure, okay, that it holds support and continues to the upside and go to the next target, which is 116 roughly. There it is. We have a G level, 115.8. Remember? There it is. What's that number? 115.953. As close as possible. Okay, this is roughly. Let me see if I can get the actual reading. It will be very, very interesting to see how close it's going to be. So let's do this. All right, I'm using the template 2. Because I'm only interested on the 50%. Make sure that the numbers are matching. And we can do a little bit more accuracy. Okay. 121.19. And the other one is 140.73. So what's the 50%? 115.830 is your 50%. Right? So I can take these numbers. I'll leave it. I'll delete these and I'll leave this G level. Delete that guy here. No, you're staying where you are. The other guy over that one. Okay, and then I can delete the overlapping lines. There we are. We only need the 50%, and that the reason we keep it because it has a number on it. Okay, so let's go back to our and look how close that is. 115.831, and look at that one. 115.830, almost a 1. Okay, so these guys, this G level is very, very significant. Okay, we need to break above to see continuation. Okay, for today and for the rest of the week, we need to stay above 114. Okay, which is here. I hope that is all clear and it makes sense. So we've seen the larger time frame, the long term, so to say, setup. Let's have a look a little bit on the stochastic average size. 7 days still pushing down. Okay, so stochastic average size on the 7 days is still going down. Today is Monday, so this is a confirmed. The cross line is already confirmed by last week, but there you have it. This is one vertical, the next vertical is here, and the next vertical is here. So let me mark this guy. So these guys are confirmed, these guys are confirmed, this one is variable until next Sunday. Okay, so we don't know from this point onwards. Let me do this with a line. I've demonstrated that before. So that line here is fixed, but we don't know by the end of the week, okay, by next Sunday, if we're going to see that line turning around. Okay, so that, let's say, vertical line, the lines are still not anchored. Okay, so they can go either way. They can go even lower, right? You can have something like this. This is a fixed point, and then you have a new line like this, or you can have the fast line turning around and giving you a cross up. That we have to see next week. Okay, that's an easy demonstration for you to understand how stochastic average size levels can't update itself. Okay, so we're still looking to the downside as for stochastic average size on the weekly. Okay, now the 15 days you see correction. You see that it's going flat, both of them. The fast line and the slow line, you see that from uptrend, they're going flat. They need more time to respond, okay? Imagine this is like a small boat. It can turn around in the waters very quickly. This is like a mid-sized boat. It takes a little bit more time to turn. And this guy's down here is like a huge cruise ship. It takes a lot of space to turn around and a lot of aging power. Okay, so it needs a lot of data before it's going to print us a change. Okay, less noise for these guys here. They need more space and more time. The smaller time frames, smaller boats, they can swing around very easily, very quickly. Okay, so far so good. So we have a strong rejection. We're losing the G level 115. Now we need to monitor, are we going to claim 115 or are we going to target 109? Okay, if we're going to lose 109, you know what that means. All right, I'm not going to talk about it now. Okay, I'm not trying to make you biased. I want you to be unbiased by me, and I want you to be biased by yourself. Okay, I want you to see the chart and trying to for yourself to understand which way you should be looking for. Okay, the reason I say that is because I don't want you to rely on others, even including myself. Okay, I want you to be confident and see the chart as it is with your own eyes and make your own decisions, and do not believe anybody else. Okay, they have different vision. Okay, they have different eye colors and they have different eye specs. So let's say, they can see clearly or they can see more blurry. Why do you need to, will you wear somebody else's glasses if you need glasses? No, you need your own prescription on your glasses, right? That is made for you. So you need to have that chart made for you, by you. End of story. That's why we have the G levels. Now, if we see, claim, then there's a higher possibility that we're going to attack 122 again for another try. If we do not get a claim and we get a rejection and carry down, you're expecting to see a support 109. If you do not see a support 109, then there's a higher possibility that's going to target this liquidity and this imbalance. Okay, that imbalance technically has been taken out, but there's liquidity here. Ignore the imbalance, but do not ignore the liquidity. So there's a higher possibility that's going to go down 95. Now, a piece of idea here, or let's say not a warning, but just keep it in your mind. If we're gonna see Bitcoin dropping under 100, okay, that will create a lot of fear, and everyone will start panicking, and everyone will start thinking this is the end of the market, okay, and they're gonna start shooting down, okay. The 100 mark is a very psychological level, okay. It plays with people's brains, okay. They're gonna lose a lot of faith. They don't lose faith right now because they lost 115, okay, because they're still bullish in their mind. They say, hey, look at that, it's going up, it's been going up for so much, right? Why now? They don't think clearly, okay. They don't see it clearly, they don't think clearly. They think that Bitcoin is gonna go to, I don't know, 300, 500,000. It will go one day, but not today, okay. So 122 is our rejection. It's dropping down. Now we're losing 115. It is not a warning, okay. Remember, the major key levels are these guys here and this guy here. The solid lines are our key levels, okay. So we have strong resistance, nice resistance. We have a break. Let's see if we can test this as a support, okay. We may come all the way down here, and we may not. We're going to see recovery straight away from here, okay, after the imbalance. That is still okay, okay. But remember, the market goes from liquidity to liquidity, and if there is imbalance in between, it will go after it. So you have liquidity up here, you have liquidity down here, you had an imbalance here, you have an, I'm not going to say imbalance here, but yeah, I mean you have a big jump between these guys here, okay. So there is a possibility, okay, that is going to go after the imbalance and turn around and go after this liquidity, or it's going to come down and take this liquidity, right? So the market goes from liquidity to liquidity, and if there is imbalance in between, it's going to go after it. Now the imbalance is a good chance that it can bounce, right? So it comes down from this area, takes the imbalance, and then goes after that liquidity, and then it's going to come down to take that liquidity. That is a possible scenario, okay. Or it will go through the imbalance, continue to the downside, take this liquidity, and then we need to see if that's still attractive, or it's going to go for the liquidity even lower, right? And that is a non-ending story. Market go from liquidity to liquidity, and if there is an imbalance in between, it will go after that as well. That's how markets move. The more you remember this, like make it a post-it note on the wall, on the side of on your monitor. Markets move from liquidity to liquidity, and if there is an imbalance in between, it will go after that as well, okay. So remember this. So you're expecting two things: reclaiming or find support. If you're gonna lose support, you know that from going short already because you got rejected, okay, that was your focus point, you already short now, okay. You want to see if that short is going to survive these, or it's going to continue to down here, and then you're going to review your thesis, and if it's going to continue, then you're going to continue. Right, that's it about Bitcoin. So Bitcoin, for the zoomed in version, for the intraday setup, for the day traders, okay, it's looking good. Claim the 50, and it's looking that it's respecting the 50. We have EU already open for the past half an hour, so let's see if we're going to get a continuation. Let's see how Asia is going to close. Is Asia going to take its own high? Okay, this is Asia high. So are they going to let me do this neutral color, right, so that people don't get mixed up with the 50%, right, the half. So this is the Asia high. Is Asia going to take out its own high, right? Let's say later on EU is going to take out the Asia high. Okay, let's see how Asia is going to close. They've got another 2 hours, well, sorry, an hour and a half, a bit less, right? And let's see if EU is going to continue to push to the upside, and let's see later on as well with the Americans. Also remember, it's the first Monday after the change of the month, right? Last few days, like Thursday and Friday, we had the end of the month and we're expecting a sell-off. Remember the options that we talk about. Now it's Monday. Now you have traders opening options, the weekly options and the monthly options. All right, it's the first Monday, so we may see a push on the upside. Okay, for us it's good news. Okay, for the intraday, because you see that you're claiming. Okay, that did not happen while you were awake. That happened to me like 3 o'clock in the morning. Sorry, I was sleeping. Okay, I don't mind that happened 3 o'clock in the morning. I don't care. All I care is this region here, right? That is my region. So this is like 3 o'clock in the morning. Okay, comes down 6 o'clock, 7 o'clock, 9 o'clock. So this is my region. Okay, go down to 15 minutes and see if I can have a focus point. Okay, so here's my focus point. That is my focus point. Okay, that's the last known data that I can use. There it is. Make it that. I have a template anyway, so let's do this focus area. That's my focus area. Okay, and you can see now that since this morning, like 8 o'clock, 9 o'clock my local time, like an hour ago, 2 hours ago, right? You can see that it's respecting the 50%. And this is the focus point and it's breaking out and it's moving up. Nice. Okay, so intraday, for people that don't want to trade now, okay, for a few hours, it's going up. For how long? We don't know. We're going to see, okay? But on the smaller time frame, you see that it's coming from lower levels, claiming levels, and pushing to the upside. So for today, it's looking long. On the longer term, going back to these guys here, for these people who are still in swing trade, okay, you are still looking for short. Why? Because you're losing levels. This is a relief rally. Maybe not, I mean, it's not going to be so valuable for the swing traders, okay, because they're open and short here and they're waiting for a few days more. They're going to wait for a few weeks. But for intraday traders, they're using any momentum at any given time. So that's my focus point right now with you since I start the live. And you have a long opportunity. Okay. Now, speaking of which, here we go. This is a long opportunity. This is ETH now, not Bitcoin. But I opened a long opportunity because I broke out from this focus point from above. Okay. Now that happened during the night. I wasn't awake. Look at that. It's coming down. And I said, hey, if I respect this guy here, that level, I'll go long. And it did. It bounced once, twice, it broke, and I got in for long. And let's see if it's going to take the previous highs. Okay, so I have a long open on ETH. Okay, so if Bitcoin is pushing, let's hope that ETH is going to push. And speaking about ETH, there it is. Let's clear a little bit of the chart. I mean, you know, these are all 50%. They're all good, but not relevant for the time being. So let's clean the chart a little bit and, you know, bring these guys forward. Let's do 250. No, let's do 350. Yeah, that's better. Let's bring these guys 350. Give more room. Okay, zoom in a little bit. I mean, this is 15. I mean, how much do I want to zoom? There it is. So what do we have about ETH? ETH is doing exactly the same thing like Bitcoin, right? It was dropping because of the options, because of the end of the month, right? Found a nice G level, 3372. Look at that. It's exactly the same with Bitcoin. So our G levels on ETH and Bitcoin are spot on, right? So you see, it did not fall under that 3,372. It claims 3,000 and a half, okay? And now it's trying to push towards 3,622. Okay, so kind of, look at that. Okay, you see that was rejection, rejection, rejection. It breaks it and retests a little bit higher from this level. Okay, a little bit higher from this level. So let me do this a little bit more professional way, cleaner way. So if you wanted to monitor a box, you can see there is a strong position here with these guys over here. There it is. Okay, And I can narrow it down to these guys over here. It seems more appropriate. Okay, rejection here, rejection here, rejection here. Here's a breakout and a retest, and you can see now the retest happened a little bit higher. Okay, it did not took the retest on the G level, or it did not took the retest on the focus box. Okay, so here's your focus box. It's going out, breaking down, it's doing small correction. Let's see if it's going to continue and break out this guy here. Okay, so this is Asia high that happened 6 o'clock in the morning. Let's see later if they're going to break their own, like EU is going to break the Asia high. Okay, so if on the smaller time frame we broke out from that box, it's coming from the lower levels, claiming levels, a small let's say pullback. Okay, kind of a little bit skeptical, right? Because you have these lows, you have some violations of these lows, and that is going to create a question like, I need to monitor this. Okay, this is like a warning. I think I have a warning template back in time. There it is. Here's my warning template. Okay, this is my last low. Okay, and I'm expecting the price to respect this low. Now I don't have a body close, but I have wicks. Okay, so let's see later what's going to happen. Are we going to break this low? Are we going to break this high? If we're going to break this high, then the long setup that I have still valid. If we're going to lose that level and go lower, breaking lower, then we need to be cautious and be careful what's going to happen with 3,500. Okay, you don't know what the market's going to do. Okay, EU just got, let's say, engaged into the market. Okay, it's Monday today. We're hoping that we're going to see like a recovery, that we're trying to go up and trying to claim levels. Okay, but level by level. This is my high, this is my low. Okay, I don't want to see price going lower. If it's going to see my price lower, then my validation is getting stronger. Okay, my validation is this G level. Okay, I don't want to see price going under that G level. That's going to be my validation. Okay, if it wants more time and breaks this high, then that's my next target. Okay, nice and easy. Nice and easy. Now the leverage that I have on ETH is not large leverage, it's 5x. Okay, so don't panic. All is good. The reason it is 5x is because my validation was almost 1%. Okay, my entry with my validation, the space between them was 1%. And let's see how that goes. Okay, let's give it some time. Right, okay, so we spoke about Bitcoin, we spoke about ETH. Let's have a look a little bit on others. Others is kind of your altcoin in, let's say, index, right? And you can see that was the point of interest. That was our target. Then it's going to come down. It went down, and look at that. Bounce exactly on the G level. Even the G level on the others walk on spot on, right? Look at that. It bounced exactly on the G level, and it's turning around and start claiming levels. Okay, let me clear this. Where is the 50%? Let's mark the 50% as close as possible. So here's your 50%, the red line. Okay, and we can see that others have claimed and are way. There it is. Let's do these lovely in pink. Now we're good with the color. I need to change the line. There it is. So here we go. That is the 50% of the between 12 and 11. Okay, so now that price action that, you know, broke above the 50% is more bullish. Okay, if you see price action, you know, reclaiming 50% and moving to the upside, is bullish. Okay, if you see that the price is hitting the 50% but fails to claim, then it's bearish. Okay, for the time being. So far the altcoins responding to this price action with Bitcoin and Ethereum into the positive. You see that others are performing a little bit better than Bitcoin. Okay, when you see others going to the upside, it's telling you that they're overperforming Bitcoin. Okay, now the candles are not so huge, they're doing a bit better from Bitcoin, but not hugely. Okay, and we can see just a little bit here that you see that Bitcoin is 0.42 after the midnight. Okay, universal midnight, so UTC 0. So we see Bitcoin is up by 0.43, and you see that the others are up by 0.95. So they're doing a little bit better than Bitcoin. Okay, ETH is up by 146. That's why I'm trading ETH today and not Bitcoin, because Bitcoin is only up by 0.4 and Ethereum is already 1.5. So Ethereum is overperforming Bitcoin. And to confirm this, let's bring the other chart that we have, which is ETH against Bitcoin. Right, and look at that, ETH against Bitcoin. A recovery, bounce from the G level, and let's see if we're gonna get pushed to the upside. Okay, ETH is on the rise, okay, against Bitcoin. So that gives us an idea that ETH is doing a little bit better than Bitcoin. Okay, right, let's have a look a little bit on the other guys here. Solana, once again, there it is. I mean, we can bring the levels out. Let's clear. I mean, look at this, all these shorts are playing very nicely. Okay, if you're going strictly by level, that was a successful. If you wanted to continue, if you were babysitting that, because that happened during the night, I wasn't awake, but if you did happen to have that trade open, we'll still go like 2 levels down, 3 levels down, 4 levels down. Okay, so that short setup that we had in Solana, it went 4 levels down. Okay, and even another setup that we had here, okay, that's a nice thing to investigate. Look at that, we open a trade. Okay, that's why I said, that's why it's very important for you to have the validation validation in place, and also you need to review what is happening and again. Okay, don't quit. Look at that, we opened a short, it went all the way down here, goes up, goes inside to invalidation, we got kicked out, so to say. But if you were babysitting, look what happened later, boom, it went down to our target. So that's why it's important, if you're breaking your focus area again, you take that trade again. Okay, that was, let's say, stop loss hand. Okay, it went against you, but look at that, the second attempt, it went exactly as planned. And even though, how tricky that is, even though that hitting that G level, it went all the way back to your focus area. And look at that, 1, 2, 3, 4 rejections. Okay, you have 4 rejections, 1, 2, 3, 4. So that focus box is so solid. Every time you're breaking out, okay, so that was your first fail, no problem. Second win, goes up. Third win, and you never came back. Right, so you could have, let's say, 3 trades, 2 wins, if not 3, let's say 2 wins and 1 loss. 3 trades. That's why you don't give up, okay? And now you see, you re-examine the data and you see that it's bouncing from 156, claiming 160, next target 165, level by level. Look at that beauty. Okay, 400. Let's bring the other guys out. Let's bring the key levels. Don't forget the key levels. 400 out. Okay, this is a breakdown. That's another level there. Let's bring these guys up for the future use. Here we go. Nice and clean and updated. All you have to do is just update the extent of the lines. That's all. Okay. And now you see that Solana is turning around. So that was a nice, lovely short. the end of the month, the end of the week, and now you see that it's bouncing, claiming levels. Obviously, you're going for long, right? Now look at that, it's going up. Now, if someone is interested in Solana, let's say now, what I'm doing now, what can I do now? Well, find an area of interest. First of all, mark the 50%. Are you above the 50% or are you under the 50%? It's crucial for you to know. Are we bullish or bearish? Okay. Well, obviously, excuse me, you are bullish because look at that. It's coming and claiming levels, right? We got rejected 165. It's doing a pullback. Okay. A little bit deep one. Okay. It bounced from the 50. Look at that. Nice, lovely respect support here. Next time it went under, deviate. Nice. Okay. Maybe you want to clear this imbalance. Now it's claiming 50%. So if I was you in Solana, I'll zoom in a little bit, looking for intraday setup, and I say, hey, I see that you just claimed 50, so that is your fresh high, and that's my G level. Okay, that's my G level. And I have to wait. I have to play the breakout. Are we gonna get this high, low, high, and fail of breaking these highs, or are we pushing up, claiming the 50%, find support of the 50% and continue to the upside to take these highs? So here's your scenario. A scenario and B scenario. Losing the 50%, right? And continue to take these lows and these lows. These are the two scenarios for Solana. As we speak right now, 10:52 my local time, you open the chart of Solana and you're like, today I'm feeling good with Solana. I want to trade Solana for XYZ reason. Okay, you are a Solana supporter. You love Solana, you understand Solana, whatever. I'm not going to judge. I'm going with the big boys. I'm going with ETH and Bitcoin, but there's no stopping you trading Solana or XRP. Because Bitcoin, Ethereum, XRP and Solana are the 4 top ones that they have more volume in Bybit. Let me demonstrate that. Let me bring Bybit here. So here's Bybit. Go here to the tokens, right? Let's say the logo of the tokens, and then that table comes up, and see the volume, right? And I sorted with volume. Who's first? Ethereum, 4.9 billion on Ethereum, 3.9 in Bitcoin. So there's more volume in Ethereum. That's why I'm trading Ethereum. Remember that we said that the cycles, Bitcoin first, then Ethereum, then the altcoins. And look who's under. XRP. Who's fourth? Solana. Who's fifth? Fifth is ENA, right? ENA with under half billion. So it's too far away from Solana. Okay, so anything above the 1 billion mark is Solana, XRP, Bitcoin, Ethereum. And that's why I got the little stars there. Okay, I'm only looking in these 4 guys: Ethereum, Bitcoin, XRP, and Solana. Okay, and because we have the XRP general, I do not touch the XRP because it's Jones token, right? General John. Okay, but because we have General John today, he's like busy. He's gonna be available in a few days. Okay, so I don't touch a lot of XRP, but I look on Solana. Right, so it is my focus point in Solana. Let's find the focus point on XRP. Okay, now this, as I said, this is a chart that usually is being monitored by John. But look at these, right? The A option and B option, and see how that goes. Right. So let me clear these all data, no needed anymore. Out. Here we go. Let me extend the lines. We don't need these. You see XRP is going down and down and down, right? We've seen these as earlier. This is the magic with the G levels, okay? You have the G levels and you see losing the G levels as soon as possible. You can catch, right, you see we marked the resistance and was coming down, and we marked the buy zone as a liquidity. That was liquidity up here, liquidity down here, right? So you see that the market went for this liquidity, it comes down, it takes that liquidity and decides not to reverse but to continue to the downside. And by having G levels, you get the early signs of a token losing or gaining levels for you to get into trades. Okay, do not forget this. Don't underestimate the power of the G levels. It's helping you a lot faster than diagonals. Nothing wrong with the diagonals. The G levels are a little bit more faster and more accurate. Okay, you have specific price attached to it. A diagonal is dynamic, it's progressing, right? And you don't have a fixed number. Horizontals have fixed numbers. These are the key differences, right? And because we deviated lower, I would like to break these 2.8 between 2.4 because we have a deviation, and I would like to see, if that's going to go lower, I need to have my levels already marked up. Okay, I don't want to wait later. All I have to do is make sure that the numbers are accurate. 8983 and 24337. Another 37. Here we are. Here we go. Nice. Mark that to 400. There it is. And I can lock that. Everything's locked. Everything's in place. Nothing's going to move. So there you have it, ladies and gentlemen. So XRP, it was dropping, was going all the way down, lost a key level of 289. It goes all the way down, deviate a little bit under 278 and start claiming. And it claimed back to 289. So now XRP is on a major resistance, which is another G level, $3, right? So now you're asking yourself, this is my high. Do this in yellow. Right, and this is my low. What's going to happen? Right, what's going to happen? So this is kind of your focus point, a little bit, wide, but that's your focus point, right? And your focus point is going to be the G level. Are we going to claim that G level? Are we going to claim this G level? And then that's going to be your focus box, right? So then you're going to play the breakout, or you're going to play, the resistance, the rejection area. And that's going to be your next target. So think this as a small liquidity. Liquidity. Okay? The price was going up. Something happened here that pushed the market down. A pullback. Okay, fair enough. And then something happened here, another event that is pushing the price up, which means it stopped the down move and created an up move. So the question is this a complete pullback and we're going to see a continuation to the upside, or this is going to be a relief rally and then we're going to see a continuation, and that's not the pullback, it's like a continuation to the downside. So for you not to get caught off guard, this is the area in XRP that you want to see what's going to happen. Okay, I'm going to create that box for you. So here's the box. Okay, and here's your conditions. The first condition is breaking out of that box and going up. It doesn't matter if it's going to go that high or that low. It doesn't matter. You need the breakout. Okay, it's a visual representation of what kind of action you're expecting. Breakout, respecting the box and get out. Okay, and the same thing for breaking under. Okay, that's your option A and option B. You're on the G level, you don't want to go long immediately here as a blind spot because this is a G level. It's a strong G level, and you can see so far it got rejected once, it got rejected twice. And now the question is, are we going to get rejected for the third time, or this time is the right timing? Let's say the rest of the market is here, the traders are walking up, the European traders, let's say that the currencies are going down, and that will benefit Bitcoin to push up. I just wrote it. All right, okay. Stelio, you're gonna drown me. Don't mess with generals, baby. Where is he? Where is he? John! Yanaki! Where are you, Yanakis? Right, okay, so he's quite busy. Probably he's trying to finish the deadlines. Deliver. Oh, that was a good one. That was a good one. Don't mess with the generals, baby. But here it is, you know. This is the setup, right? So you don't want to play long right now on the rejection level, okay? A lot of people will go short here, and they have a right way of thinking of going short. They're going a little bit more as a gamblers. I'm not going to say gamblers, but they have so much trust on their strategy, okay? And they say, hey, this is rejection under the line, this is rejection above the line, so I'm expecting a rejection under the line, okay? So a lot of people will start shorting here, okay? But for you, I want you to make sure that you see a clear rejection, because there's a high possibility that it's going to come in and break above, okay? And as it does now. So you see, as we speak, XRP is pushing through the G level, okay? So let's wait for a few more candles and see what's going to happen, okay? Because you may see that it's going to come in, comes back, and then find support, and they say, okay, that is good, this is good, it's accumulation, we're building up a case, right? And when you see start moving and breaking out, that will be your trigger, okay? If not, you see something like this, then you see a rejection, that will be your trigger for you to go short, okay? Give it some time. Don't rush, don't jump into conclusions, wait for the evidence. That will save you a lot of pain, okay? Doesn't matter if you miss a few minutes, okay? The next target is up here. So even if you go for a long play, okay, here's your setup. Your validation is out of that box. So what is your validation? 0.55. So bring the calculator. So 5 divided by 0.55. That is giving you a 9x. Okay, so your next target is 3.3. Okay, so do 3.3 times 9. That's going to give you 30% almost. Take out the fees, 25%. Boom, your daily target. That is full wallet. Full wallet, 9x, risking only 5%. Maximum 5% you risk. You're risking 5% for you to gain 30. Or 25 after the fees. Okay? So, that's your setup. If let's say the short is going to play out. So, here's your entry, which is your trigger. Your stop loss is going to be out of that box. Right? And your next target is going to be the next G level. So you have almost identical because you have the same box, right? So entry out of the box, invalidation the other side of the box, so that's 0.55. So for short, it's exactly the same risk. So again, it's a 9x. But this time, your target is 385. So 385, there it is, 385 times 9. That's going to give you a 34% profit. Take out the fees, 30%. So if it goes long, you have 25% profit. If it goes down short, you have 35% profit or 30% profit. Okay, 25 and 30% profit. You're risking 5% only, but you're trying to target 30. So what's the ratio? 6 to 1, 7 to 1. Right? So it's not too bad. That's what you want. Patience, plan the trade, wait for the conditions to be met. Once you have the evidence, you take your chance. It's not going to be 100%, but you have a good probability. It's going to be on your side. Okay? If the market decides to do wobbly and, you know, doing nonsense, it is not your problem. It is not your fault. It is not your problem. You do not control it. Market is a random walk. This is another note that you're going to put on the wall. Post-it note. Market is a random walk. End of story. It can go up, it can go down. You have no control of it. what do you have in control? Your money, your trades, right? So risk management. Here's my money. I need to make sure that I plan the trade, right? Oh, maximum, my rule, golden rule, never risk more than 5%. End of story. For no reason, no more than 5%. If you go to casino, remember this rule. Go and play, but make sure that you don't lose more than 5% for that game, for that bet, because you have remaining 95% for you to recover, right? If you go all in, you're risking 100%. You may be lucky and you double it, okay? Well, it depends, what kind of game you play. There is a chance that you can double it, triple it, 10x it, 10x this, but what are the chances? Right? It's very slim. You have higher possibility of losing that money instead of winning that money. But people go on emotions. This is what the casino is doing. It's triggering your emotions. It's very carefully designed. Okay, they have no windows, so you don't understand if it's day or night. They have very high expensive equipment to circulate the air full of oxygen, so you don't get tired. The more oxygen you have, right, the better you can stand. So they play with your stamina. There's no clocks inside casinos, no watches, no clocks. You cannot look around to find a clock. That's a reason for you not to understand, how time flies. No windows for the same reason. They have plenty of light, so you always think that it's day. The quality of air is spot on to make sure, even if they smoke cigars in there, the atmosphere in there is spot on. Okay, they have very expensive ventilation systems. The temperature is spot on to make sure that it's comfortable, not too hot, not too cold. Okay, they have a dress code. You need to look smart. Why is that? Because you, as females and males, you like what you see around you. You feel good about yourself because you look, like $1 million star, but you have other stars around you, and that creates a nice mood. And for the man, when they see a lady with a nice dress, wow, bingo. They think they're in the cinema, in the movies, right? They think that they are James Bond. Free drinks, right? Free food. And then you have all these bling bling lights and noises. If someone wins, goes off, and that creates hyper moods. So everything is carefully designed. So what are they doing? They're manipulating you to 1,000 million %. 1,000 million %. They manipulate your senses and your emotions. They're gonna feed your greed, right? It's funny enough, I've said that before. Do you know the percentage between the ratio, the win rate ratio between the customer and the house? You're gonna be shocked. It's 80-20. And a lot of people think that 80% is for the house. No, it's not. 80% is for the customer. 20% is for the house. That is the win ratio that they have in the casinos. 80% chance for the customer to win and 20% chance for the house to win. But how come people lose money and always the casino wins? Because when the casino wins on 20% of the chances, they win big. When you win 80% of the times, you're going to win small. And that creates a time machine, which means they're going to keep you there as long as possible, because you see some wins, but no big ones, small ones. And you're trying to recover, and you're trying to do it again, and you're going more aggressively. Give me 1 second, guys. All right. So So yeah, so the casinos is been very, very carefully, smartly designed to make people stay as long as possible and risk as much as possible and feed the greed. But you don't need to worry about food, so you're never gonna get hungry. You don't need to worry about drinks. You're never gonna get thirsty. You're never gonna get cold or hot. The atmosphere is gonna be always 100% spot on with nice people, lovely dresses, lovely mood, right? So this is how they win. So you need to apply, even in the casino, that 5% rule. They say, hey, if I'm going to play whatever roulette, whatever that is, any amount of money that I have, I need to make sure that I'm going to bet 5%. You're not going to make a lot of money straight away. However, you have the risk management in play and you control the game and not the casino. The casino, they don't like people that they can control the risk management. They create this hype, they create this atmosphere for people to go reckless. This is how the casino make money, right? So the same thing here with the markets, right? See it and wait for your move. Okay, it's the same thing example that I said back in the day. The story, the analogy of the fisherman. Okay, so the fisherman comes above the sea, right, on the surface of the sea. So let me do a little bit drawing. So there you have a little boat, right? And put a little anchor there. Oh, nice. And then you have nice selling sails there. Nice. Okay, so you have the settlement, the fisherman throwing bait into the water, right? And that will attract small fish to come to the surface, but they're not after the small fish, okay? But what they're doing, they're throwing the bait so that the small fish come in, right? So the bigger fish can come into the surface and try to attack the fish. And this is where they want to pull the nets up when the big fish are coming, right? So they're not after the small fish, they're after the big fish. So once the net is going to be pulled over, right, this is the time that I want you to get into a trade, because the fishermen right now are busy on the boat with the some of the small fish and some of the big fish, trying to sort out, they're going to throw the small fish back in the water and keep the big fish. Okay, so they're going to be busy on the boat and the boat is going to go away. That is the market maker, right? So he's going to go after, he's going to throw the bait. Retail is going to come in to create liquidity. Then some of the big traders, not all of them, but some of the good traders are going to come in, okay? And then this is the market maker that's going to do liquidity grab, liquidation, stop loss hand, whatever you want to call it, and take it out, okay? And then the market is going to be silent, not big fish, not small fish anymore in the water. And I want you as a whale to come in and take the trade when the boat has gone. So that is the theory behind it, right? The analogy, that is the theory behind it. So don't jump, don't try to rush into things. Mark the levels. This is swing high, this is swing low, this is a G level, we just claim it. Are we going to stay above? Liquidity here, liquidity there, what's going to happen? It's going to grab liquidity, come down? Perhaps. Is it going to find support and move to the upside? Perhaps. So because I don't control the markets, it's a run and walk. I always have option A, option B, and I never risk more than 5%. That doesn't mean that in the in trading I can't go full wallet. You can go full wallet, right? Do the math. What is the percentage of this invalidation? So my trigger is going to be here. Let me do this with the right tools. So I want to go long. What is my invalidation? That box there. Okay, what's my invalidation? 0.6. So whichever way I'm gonna go long or short, I know my risk is 0.6. Okay, here's my trigger for short, and here's my validation, 0.6. You see, it's exactly the same risk. So you pull out your calculator and say 5% is my maximum risk divided by 0.6. What is my leverage? So your leverage is 8 by going full wallet. So you apply the risk management that you don't want to lose. Okay, you don't want to lose more than 5%. So you have low leverage, 8 for this instance. Okay, 8x is your leverage. Your risk is 5%. And the rest is history. You're going full wallet. Whatever you make, let's say the next target, right? So next target is my next G level. So let's say 8 is my leverage times 3.2 is 25%. But that 25%, right, that's the magic here. That 25% is 25% of your wallet because you went full wallet. So you increase with one trade 25%, you increase your capital by only risking 5%. That is the fastest way for you to grow. But you have to be dead serious and dead disciplined that you're not going to risk more than 5%. Now, if you have my calculator, the Excel sheet that you all have because I've shared it, it's inside the Discord. So let me bring this baby up just for one example and go to the risk calculator, right? So let's say that 0.6 is my risk. There it is again, got it. Thank you, bye-bye. So you see, you got the calculator and it's telling you that your maximum safe leverage with full wallet entry is 8. And down here in gray, I have other examples. Okay, so position size, you have to go in with 833. If that happens for you to, let's say you have only $100, multiply that by 8, it means you can go maximum 833. Okay, but because remember, it wasn't a round number. Okay, it was a decimal number. Let me bring the number up again. 5 divided by 0.6, you see, is 8.33. Okay, that's why you got 833. But I made a calculation that the leverage is going to be a round number. You see here, I have a formula that says it's a floor. It has a round number to the 1. So it has to be closer to the 1 and has to be lower. So if it's going to give you 8.1, 8.2, 8.5, 8.6, it's going to give you lower. It's going to give you the 8. Only when it goes above 9, it's going to give you 9. Okay, if it goes above 10, it's going to give you 10. Anything below 10, it's going to give you 9. It's been, the formula has been that way to make sure that you don't have decimals, because not all exchanges have decimals. Poor bird was caught in the cyclone with all these drawings, of course. We don't want the fishermen to go away with the fish, so cyclone is good for them. Right, so now the gray. Let's say that you don't want to go with 8x leverage and you want to go a little bit higher and you want to go with 10x leverage. Okay, instead of going in with $100, remember, with 10x you can go with $83.83. Okay, so that means you don't go full wallet, you decrease your position size and you increase leverage. Okay, and if you want to go with 15x, that means you can put down 55, which means half of your wallet. Okay, almost, right? 2 times 8 is 16, so you went almost half of your wallet. However, a lot of people will feel temporarily that it's safer going with the smaller entries. Hey, I'd rather go with less money because I don't want to lose my wallet. I don't feel comfortable me putting down full wallet size in my exchange. Why? You did your risk management, you did the 5%, but still, you don't feel safe. And other people have the idea that it's better to go with less smaller position size. Fine, increase the leverage. Now here's the problem. Going in with high leverage, you pay more fees. A. Exiting, you pay more fees, right? So entry, exit is high. Also, you have to be careful that if the market goes against you, if you're strict with your stop loss, you'll still lose 5%. But you pay more fees. So you have to put that down and see what is more to your favor. Do you want to pay more fees? Or do you want to play with high leverage? High leverage is more riskier. Liquidation price is way closer. If something happens with your stop loss or you didn't put a stop loss, a lot of people do that. They still do that. If it goes against you, it's going to go really fast against you. Anyway, this calculator is here to give you an understanding of risk management and how much you need to go down. I rather have higher position with lower leverage. That is the safest way to go. Full size, which means one trade only, fine. I'm babysitting one trade. Full size, as low leverage as possible for me to be out of the scope of the systems. I don't want to be the high leverage like 20, 25, 50x. I don't want to be in that I don't want to be in that scope, so to say, in the system. Say, hey, we've got high leverage people, let's flash the market. I don't want to be part of that. Okay, so I'd rather go full size, low leverage. By going smaller size and high leverage, the percentage that you're going to win is exactly the same. You're going to lose the same, you're going to win the same, because yes, you have 15x leverage, but you have less money. So the percentage that you're going to go higher, it's not going to give you a lot of money, right? So be careful about that one. So still in the play, XRP is inside the box, respecting the G level. So far so good, but let's break out. Do you want to have a cheeky entry? Right? If you see that it's going to break above the 50% of that box, you can have a cheeky entry, but your validation is very close, right? So I rather wait to break out the box. Cheeky entries, leave it for another time. Okay? When the market is so uncertain, don't try to have cheeky entries. All right. Okay, let me clear all these all the way down here. Boom, out it goes. These are the conditions, right? For XRP today, it's at 8x leverage, and these are the levels. Get out from above, long. It's getting out from below, short. Okay, plan A, plan B, you just wait for the evidence. Right, so here we go. We got the box from Bitcoin is pushing up, but it's getting a little bit exhausted, right? It's not breaking these highs. So we need to monitor that area, another focus area, and see, are we going to continue or are we going to drop it? This is just a little bit to monitor if that is going to be a fake out, right? A good try, but no, it's going to come down. We're going to watch. What about ETH? Here it is. ETH hasn't broken yet the highs. Same thing with Bitcoin, but we will wait. Okay, we will wait. If it's going to come down and break my warning, it's going to be my moment. All right, get ready for you to get invalidated, so to say. I'm not going to trace and I'm not going to chase and close a trade. No, I have my validation point. Let's say if my validation level is here, okay, make it that nice and lovely red, bright red. There it is. So if that is going to be my validation level, I'm going to keep that invalidation there as it is, right? I'm not going to chase trying to cut corners. No, that is my validation. It's exactly there for a reason. I planned that stop loss. I made the deal with myself. I'm happy that I knew that it's only 5%, and I'm happy to lose that 5%. That's it, end of story. I'm not going to change my mind because you may see something like this, right? You think that it's going down, you've broken the G level, or you say, oh shit, it's going down, let's cut this sooner. And then you see that it's turning around against you. And you're like, oh, why did I exit? No. If it's going to get invalidated, let it invalidate it properly. Okay? You already made the deal that it's a 5% and you're good. So every time you get triggered by stop loss is a good event, not a bad event. So don't try to correct something that you think that is bad. No, stop loss is there for a reason. You planned it. You know that is 5%. It's okay. That's my maximum loss. It's 5%. I don't need to touch it. Okay? Nice and simple. Right, okay, that's it for today. Market update. Look at that. Bitcoin is getting out of the focus part. Okay, that seems like a fake out. It's coming down, and now I need to be careful what it's going to do with that box. Okay, is it going to come back to that box? Look the next rejection area. So that's supposed to be a small rejection area. What is it doing? What is it doing? Is it going to respect that, the support, and then move to the upside? Or it's going to lose it completely, lose its mind, and it's going to come down? Market is ride and walk. You don't know what's going to do. You just only control your chart, you control your trades, your theses, your entries, your exits, your stop losses. You control all of that. Okay? So now that makes sense. V-shape, okay, so there it is. It's dropping. You cannot break above this shape here, that shape, V-shape, it cannot be broken here. And also that one here, that rejection is not acting as support. So for this 5-minute candle, it doesn't look good. Okay, so we're dropping back. So that was I'm not going to say fake out, but it was a failed attempt. Okay, for the time being. What ETH is doing? Still holding. Okay, where is my Bybit? Let's have a look on my Bybit, what Bybit is doing. There it is. My entry is here. It's coming down a little bit, but I'm still in profit, 1.9. Not a big deal. Very low leverage anyway. Okay, that's why the numbers are not so big. But as I said, it's not about, it's, going low leverage full wallet and trying to target the target. The target is going to be 8% for the time being. If he wants to claim higher, go to another G level, that's another story. But for the time being, my TP is going to be 8.7%. Okay. Why? Because the G level, the next G level, is too close to me. Okay, I'm not going to be upset about it. The next G level is higher. So if I put my stop loss to the next G level, what is going to be the percentage? 32. So all I want to see is ETH breaking that G level, claiming, and I'll continue. I'll push my TP further up. Okay. So let me bring this guy here and see how that goes. And we monitor. If I'm going to claim that G level, so to say, then I'm going to minimize my stop loss. I don't want my stop loss to be down here, right? I'm going to break it a bit higher. So that's it for today, ladies and gentlemen. Have a lovely, lovely, lovely day. Bassman, there is a possibility that Bassman is going to do a US Open market update, and I'll be around to support him. Okay. And I'll catch you guys later. Have a nice one. Take care. I'll see you later. Bye bye.